Good to be speaking with you. I understand that you bagged a couple of orders, almost 180 crores thereabouts. But talk to me about the pipeline going forward. What kind of order prospects do you have for the rest of the year? Because usually election year is supposed to be a bit somber. Is that the case for you? What's the pipeline?
So, good afternoon and thank you for having me. The pipeline is actually quite exciting, and we see at least a 30% growth on last year's number in terms of where we land for the year. We've also started taking large turnkey EPC projects, which is adding a lot of value to the top line.
Right. Hi, Rishi. This is Cheryl also joining the conversation. So, so if you could tell us exactly where the order book is standing right now for you, and also, like you said, that you have been bidding well for EPC projects, and also what's the pipeline, the number, quantum of that?
Right. So, our order book today currently stands around 650 crores, and this is all executable in this financial year. For the renewable sector, we are seeing a very healthy pipeline. There's more than 10 gigawatts of inquiries, both for crane rental as well as construction, turnkey construction for the renewable space. Besides that, cement, steel, metros, railways, bridges, and all other sectors of the economy are contributing to a very healthy inquiry pipeline.
Pipeline, and yes, that renewable push is something that the street has been watching out for, the kind of order inflows coming in on account of that. But Rishi, you've had an enviable margin profile of 62%, revenue growth of 35-40% on a consistent basis for the last 3 years. Is this something which is maintainable for you? Let's say a growth of 35 to 40% in FY25 with a margin picture of almost 60 to 65%?
So, we have branched out from our core business of crane rental, where there's a very healthy margin into undertaking the turnkey EPC works. So we see a 60-40% split on our revenue for this financial year. And at the end of the year, we would have an average blended EBITDA, which would be much lower than the 62%. The crane business will remain at a 60% EBITDA. The EPC business would end up anywhere between 10 to 12%.
Business is margin dilutive, Rishi, then what's the reason of going into that? Because it doesn't seem like it's being accretive at the margin level. I understand that you will get a revenue bump up, but wouldn't have it been better if you continued with the crane business, because your asset is underutilized there in the sense that you could have bought more cranes and probably deployed those?
So, on the utilization levels, we're actually at above 80%. So this is a theoretical 100% in our industry, and we're not underutilized with our existing asset base. The reason to venture into the renewable space was frankly a lot of pull from our customers. There's a huge opportunity space there as renewables today for a player to bridge the gap between the OEM and the IPP. So we are providing turnkey services right from conceptualization to commissioning. And all the IPP or a customer needs to do is select the wind turbine, and we are taking on the rest of the responsibilities. We see a large opportunity in this space, and going forward, we believe that the bottom line in terms of in value will almost equal our core crane business.
So you've emphasized that there's huge opportunity in the renewable space. So any number that you can put to the size of the opportunity that you have?
Yes, so as I already mentioned, we have approximately a 10 gigawatt inquiry pipeline, which is frankly unheard of, and the sort of momentum and the inquiry flow that we're seeing in the renewable space is very promising, and in my opinion, something that the country has not seen in the last 2 decades.
Okay, so that's a view coming in. Your crane capacity and the fleet count has been somewhere around the 380, 390 mark. In fact, in FY24, I see that it's dipped a bit. Have you already placed some fresh orders for the next couple of years? And what kind of capex plans do you have for, let's say, FY25?
So as of today, our board has approved a capex of approximately 150 to 200 crores. Our asset fleet size has been increasing. And in fact, this year, we have been ranked as the fourth largest crane rental company in the entire world. So we do see us developing, further expanding our fleet, but this would be subject to the board approval and the demand that we are already seeing from the economy.
What sort of a demand are you seeing? Do you think that you will have to go back to the board and ask for that capacity expansion or for increasing the fleet size for now?
Well, it definitely looks like that as of right now.
All right. So, what sort of an outlook that you have? You've definitely spoken about the order book looking good, good opportunity that you're seeing in the renewable space, as well as you spoke about the margin as well. Any number that you can put for the revenue growth going ahead for this, at least FY25 and FY26? Any number that you can leave us with?
So we definitely see a more than a 30% growth at the overall levels. So last year we ended at about 620, 630. I think we'll close the year between 950 to 1,000 crores.
Some clarity there. Thanks so much, Rishi, for joining us with that.
If you like this video, then like, share and subscribe to ET Now.